Hey guys, welcome back to the Genesis Blog podcast. Today we have another thematic analysis for you, presented by Sid. And today we're going to basically do a recap on the entire NFT space. And we've kind of based our entire analysis on a really detailed Delphi digital report. So credits to them completely. And we just wanted to kind of discuss that report and maybe discuss it in a more digestible way and in a more fun way, maybe for our users. So, in that vein, Sid, over to you.
Absolutely. Thanks, Yash. Um, so like you mentioned, we're gonna just go over the broad topics covered in the report and discuss wherever we think is worth discussing. Correct. So the way this is going to be structured, we're going to first cover a few let's say reality checks of the year 2022 because it was a big year for NFTs. Um, and we're going to after that we're going to just quickly go over the state of the market today. So that includes, what are the major exchanges, what are the volumes like, and so on. And then at the end, we'll talk about a few themes that seem to be emerging for this for the next year, and maybe it is worth people in the space to keep an eye out for. So with that background, let's jump into the quote unquote 2022 reality checks, right? Um, so firstly, let's talk about creator royalties. I think creator royalties were a huge factor in, um, in, I mean, it was one of the major use cases that brought a lot of people, to think about NFTs. And it does make sense. It's not like, um, what was said earlier is just not true now, but a few developments have made the rationale of NFTs as creator royalties being a primary use case of NFTs into question. And what do I mean by that, right? Um, if you if you look at SudoSwap, SudoSwap is one of the is probably the first decentralized exchange for NFTs, right? And when they launched in mid 2022, it was without creator royalties, right? So what that means is every time a trade happened, every time a purchase was made of a particular NFT, the original creator of that collection didn't get a cut, right? Um, and this was a first because previous exchanges, I mean, notably OpenSea, all had this feature enforced, right? Um, but surprisingly, after SudoSwap did this, one would expect there to be some sort of backlash, um, or if not backlash, at least a firm stance against this practice. But what we saw was the opposite. Other exchanges such as X2Y2, LooksRare, um, they all made this move to making creator royalties optional, um, and this hasn't slowed down you you know this has slowed down the user participation in this market. Um, what has slowed it down is the overall market downturn. But uh, to say that the lack of creator royalties has slowed down adoption from the user side would be straight up false, which is surprising, at least to me, right? Um, so why has this happened? I mean, one one point of view towards this is the fact that because of this macro slowdown, um, exchanges have had to prioritize uh, trader preferences over the supply side preferences or the creator preferences, right? In order to stimulate trading activity, which we all know is the main source of revenue for these exchanges. Um, Correct, and that is what we see. Um, However, and I'll just after this last point, I'll take a pause and hear what you have to say about this. Surprisingly, OpenSea, the largest exchange of them all, has been quite outspoken about their stance for creator royalties. So, um, out of everyone, they have actually been uh, one of the entities that, I mean, I would say the only notable entity that has said, we will stand for creator royalties and we will enforce it no matter what. Um, which has been an interesting stance because it seems like with them already having this edge in the market because of their early mover and the deep liquidity they've got, it would be an easy move for them to um, just switch off or make royalties optional because everyone else is doing it, right? It's become market standard, but they haven't, which is, in my opinion, um, it's. I mean, I respect them for that, but we'll see if it's. I think it's still early to see if it's a defining moment or not for them. But yeah, I'll just take a pause there to see if you have anything to say about this.
Yeah, lots actually. So the way I see it is currently a majority of the NFT market is still dominated by PFP JPEGs, right? That's the main reason people still want to go and trade and try to make money on these different JPEGs. And OpenSea was initially, it had a landslide market share because it became the de facto place during the 2021 bull run to trade, right? So people knew the name and they would just go to OpenSea and trade without really thinking about it in the hopes that they would make money. But now, once NFT trading has become a lot more professional, there's a lot more tools out there to help a trader. Eventually, also there's like a lot of different marketplaces that were created. X2Y2, Blur recently, Looks Rare, where they cater more towards specialized traders. And specialized traders care pretty much about two things. It's like the features at their disposal to make sure that their trades go through as seamlessly as possible, and obviously the costs they're paying on the platform, right? So obviously these different protocols, since they made royalties opt in, obviously no trader will opt into royalties because it's the game theoretic decision to not do so, right? You want to benefit as an individual and you want the lowest cost possible. And then the minute one enforced that, the rest obviously had to stay competitive, and it was a race to the bottom. Which is why you see a lot of these different new NFT marketplaces gaining market share, and OpenSea has lost a lot of market share. And this is because all these markets are so similar that there's pretty much nothing differentiating them other than the features, because you can buy and sell the exact same NFTs on these different protocols, right? So it becomes completely down to the trader where he wants to trade, and traders will dictate who wins this war. And currently, it looks like if OpenSea continues on this path, they'll win the hearts, but they will not win this war of gaining market share. They will lose. At least that's my opinion.
Yeah. I think the key word here is, or the key point here is that the the you know the user base is dominated by traders and not by collectors. Because if
Exactly.
if you look at it from a collector's perspective, he or she is in it for the art, not for the. I mean, they of course see it as a store value, but that's a secondary benefit. The primary benefit is a lot of the enthusiasm and the passion for the art itself. And in that case, um, more likely than not, they would be happy to provide that financial benefit of royalties to the artist, because that is what is deserving, right? For an artist to reap the benefit of their work. But like you said, the fact that traders um, are the bulk of the market, and then this, I was going to go into, we covered further down in the article, but now that you mentioned Blur, right? Blur is case in point in what you're mentioning. Yeah, they have actually been one of the first, or if not the first, to significantly, pose a threat to OpenSea. Um, to a point where right now I believe Blur volumes, not um, number of trades or anything, but the volume metric specifically is higher than in OpenSea, which is a year ago we
Yeah.
would say that's completely unheard of,
Yeah.
like that's impossible.
Yeah, I
And that is
guess Blur also has a lot of catalysts. I mean, that's a whole separate topic, but they do have an airdrop that I think
correct.
it came out today, right? So there's
Yeah,
probably a reason that people might be airdrop farming as well. And it remains to
absolutely.
see now after this whether those volumes will sustain. If they do, then I think it might be proof that they have successfully with their whole launch actually managed to retain a sticky user base.
Yeah, yeah, no, absolutely. I think token incentives are a factor, but if you think about it, it's not new. It's not unique to Blur. Other
No,
NFT marketplaces.
what's unique about Blur is the experience for traders still.
Correct.
I mean, tokens are just a way to incentivize people to use it and realize that wow, this is a good platform.
Absolutely. Absolutely. Interestingly, um, Blur and OpenSea had a little mini war in between. I'm not sure if you're aware of that, but basically, for the audience members who aren't, what happened was because Blur also did not, was one of those marketplaces that had optional royalties. OpenSea launched, provided a code snippet for all collections to if they added to their collection, then only then they would be allowed to trade on OpenSea. And what that code snippet effectively did is blacklist other marketplaces which did not enforce royalties.
Yeah,
So in effect, then Blur was one of these marketplaces, and that hit them quite hard because a large number of collections would obviously choose OpenSea because that's where the users are. But interestingly, Blur, they found a way to hit back at OpenSea by bifurcating their trade engine into two. So once they had their current model, and second is they implemented their platform. They built it on Seaport, which is the open source marketplace protocol, which OpenSea has also helped to build. So now what happens is any trade that has that code snippet that blacklists Blur can be still traded on Blur because Blur has this secondary execution engine, which is built on Seaport. And now it's kind of a funny situation because the fact that Blur, a significant exchange is using Seaport, is beneficial for OpenSea. But then their initial, their initial
yeah,
move has been counteracted. So it's just interesting dynamic to see.
yeah, definitely.
Yeah. Cool. So let's move on. Um, the second surprise, um, I mean, not surprise to me at least, but to many were Solana NFTs. And I guess the surprise here is that a lot of other blockchains, side chains had high throughput and cheap fees, but it was still Solana that grew to the second largest NFT ecosystem, second only to Ethereum, obviously. And at if Ethereum's market cap of all NFTs is 1.5 billion, um, Solana's is around 200 million. If you just look at the aggregate value of all the collections, so it's quite a step. It's quite a gap, but still, the fact that it reached second is quite saying something. Unfortunately, however, because of FTX and their association with the Solana ecosystem, um, they have taken a significant hit, which has actually led to this was surprising to me, which led to their top projects, notably DGods and Utes, migrating away from the Solana blockchain. Um, I mean, so that's the story. But if you ask me personally, I think this move, um, I don't know the details of it. I believe I read somewhere that they were also paid, a fixed amount to make this move. Um, in the sense, Polygon, I think Polygon was the one who paid DGods to migrate to Polygon, the Polygon ecosystem. But if it was a strictly strategic decision, I feel it might be a little short-sighted because from what I've seen, is the Solana ecosystem has really rallied well in the aftermath of FTX, and because FTX had a lot of Sol exposure, Sol's price tanked, and therefore, as a derivative, the whole NFT ecosystem in their blockchain has been affected. But I personally think that this might have been a bit short-sighted, and you know, the projects on Solana uh, still have some way to go if they keep on building. Yeah, that's my take. Anything from your end?
My take is about what does it mean? I mean, what does it mean to own an NFT really if it's not on the most premium block space out there, the most decentralized, the most likely to survive forever, right? I mean, an NFT, people would ideally want to mint an NFT because on premium block space because it will live on that block space forever and you can't really transfer NFTs between chains like you can tokens, right? So higher throughput chains with low fees like Solana are great because you can onboard retail users. But long term, is that NFT really as secure on Solana as it is on Ethereum? And long term, I'd say probably not. Right? Ethereum is the most decentralized and rugged block space there is. So I think the Solana NFT boom happened because it was an extension of the general NFT boom, and retailers always are late to these different hype cycles usually. And when they're late, they either want exposure to it in the form of leverage or in the form of cheaper, more degen products that they can essentially buy. Which is why I think the Solana NFT ecosystem rallied really hard. But
Hmm.
um, I don't know if it'll be sustainable long term, especially
Yeah,
after what happened with FTX.
yeah. I think that's a fair point that you make. I think one other thing I'd add is beyond security, and I'm not undermining the value of security in this conversation, but I think owning NFTs is also to an owner, it's important to have them in on an ecosystem where there's usage, right? So yes, you could say Ethereum uh, is the most secure, therefore it warrants, say, the very absolute high value NFTs for something like a Beeple. It makes sense for an Ethereum to where for that to live, but those high churn NFTs, I mean, examples of that could be in-game assets, right? Maybe that's one niche where the Solana ecosystem can, you know, uh, find some sort of traction. And of course, the cheap fees, the high throughput, it just makes it more accessible, and that just caters to a different set of users, right? So yeah, I mean, just I think a few other variables to take into account.
Yeah, yeah, I agree.
Awesome. Um, cool. Let's move on to music NFTs. I think this is something that I think we've covered quite a bit, and at least
Definitely.
it's to me, it's quite it's quite important to me at a personal level. But unfortunately, we haven't seen the great adoption of of NFTs in the music realm. Um, to me personally, it wasn't a surprise at all because um, the I thought that it would follow the general market wherever the market went, it would follow it, and that's precisely what's happened. But on top of which, I think the infrastructure, the legacy systems I've built are on the more intertwined and more complex side. So if you compare, say, the music industry versus the fine art industry, it was much easier for the fine art incumbent industry to assimilate with NFTs, or NFTs to assimilate with them, I should say. When when you compare that to the music industry, it's just not the case because of I mean, we can I refer the audience to our music NFT piece to understand the complexities of that. But I think
Basically,
for
it's because record labels still have way too much power in the value chain for musicians. And so maybe newer musicians can benefit from NFTs, but musicians with existing record deals who have massive following would find it harder to monetize the NFTs given the contracts they're probably in. And yeah, so
yeah, and not just existing musicians, but also past musicians who are no longer with us, but
yeah,
the rights are owned by the record label still, and for them, it is highly unlikely that they would want to, use this approach when there's already a approach that already works for them. So I think the bottom line here is very simple, that I think the the base case and the reasons for it that we spoke about in our earlier piece is sound, but I guess it's going to take longer than expected, which I think is a theme of everything in the crypto industry right now.
Yeah, I mean, it's pretty much always 10 years away, isn't it?
Absolutely, man. But excited to still see how this particular the music NFT space develops. And we'll update our audience as and when. But yeah, I think that's it for the 2022 topics. Let's move on to the current market environment. So, this is actually a perfect transition from what we just touched upon, which is, you know, um, adoption is always 10 years away. And then it seems like if we compare it to the Gartner hype cycle of, there's an initial wave of hype which peaks, and then, has a major rundown in proportionate or if not faster speed to what they call the trough of disillusionment. And then there's like a steady incline to what we call mainstream adoption. I think in this whole cycle, we're definitely at the trough of disillusionment. Um, some might say that, that was post 2017, but I think different segments of the industry are at different points, and NFT specifically are definitely here because 2021, 2022 was the first time they, at least as not just one example of NFTs, which was, CryptoKitties back in the 2017, 2018, but this whole segment as a whole witnessed significant hype, if you will. And now, of course, we're seeing, the boomerang effect coming all the way back down. So we're definitely, it's helpful to look at the market right now through that lens. So why the volumes have really fallen off a cliff, and the activity, I should say, has fallen off a cliff. Um, so so yeah, and one thing that I will mention before going into the actual statistics is for people who weren't really in the space. Um, at one point, there's this whole phenomena of gas wars, right? Which for us seems very like uh, looks seems very normal and common, but it was basically a phenomena where the transaction fees to purchase an NFT was higher than the purchase price itself.
Yeah.
Which if
Yeah, that's crazy.
is there an analog to that in the traditional world, if you will?
I mean, it's if you're, I mean, I really can't think of anything like that.
Exactly.
Yeah.
It's that exactly my point, and I couldn't, and that's why I think that one particular example is such a helpful example to understand, why everything got so overhyped and where we are today. Um, so yeah, so let's just quickly run through the statistics as we are as it is today. In terms of volumes, NFT volumes definitely off. I think in around September 21 to April 22, we were at that 1 billion plus mark in terms of volumes, weekly volumes, and now we're sitting below 250, around 300 250 million US dollars. And one thing in spite of this large correction, which you already alluded to earlier, I think one thing that's interesting to note is back then it was predominantly just OpenSea volumes, but now, like I mentioned earlier, Blur has actually eclipsed OpenSea in terms of weekly volumes. So around I would say 40-45% would be Blur, and maybe 30-35% would be OpenSea, which is quite phenomenal to see. And then, of course, there's a huge long tail of other marketplaces.
Yeah, I think Blur also announced they're going to be raising at $1 billion valuation today, which is crazy,
Oh, really?
considering how
Interesting.
recently they.
Yeah, absolutely. That's unicorn status in less than a year. It's just quite amazing. Um,
Yep.
yeah. So with that, but we will caveat this by saying that um, OpenSea still ranks number one in terms of number of trades executed. So by no means, I think it's too premature to say that Below has overtaken OpenSea yet in terms of market share. But
I
definitely,
would think that,
yeah,
I mean, it's just a calculated guess, but I would guess that OpenSea probably has more traders, but traders who trade with in lower trade sizes, while Blur
exactly.
has a smaller number of traders, but they're more degen, maybe more, from the DeFi and those kind of places who have come to NFTs simply to make money and trade and get the best execution price. And they probably trade in volume because they're crypto rich or whatever.
Yeah.
That's I feel like they're two completely different segments of users who are now segregated on two different platforms.
Yep, absolutely. And in fact, while I was, doing research for this, I came across what Blur's insight was for them to actually launch Blur, and that was 70% of OpenSea users were in fact the traders and not the collectors. So it made sense. It made rational sense to launch a product specifically for them and attract their usage away from OpenSea. And I was we're probably going to cover it later on as well. But essentially, you know, features such as sniping, which basically means putting a bid at the like as late as possible in order to win the auction. Um, Features like sweeping across marketplaces, right? Portfolio trackers. Um, features such as this is what actually has attracted these pro traders away from OpenSea. Um, but yeah, I think I think looking at the market as a whole, like you said, PFPs still definitely dominate the usage, but there have you know been there have been increases in fine art, generative art. Generative art has been quite um, has seen its own mini rally, and of course NFT game elements, right? Um, and in spite of the I would say in spite of the developments at the chain level in terms of high throughput and fee reduction across primarily through L2s ETH L2s have seen a lot of this development. Um, NFT interest has not still gone back to prior levels. I think this is primarily uh, because as a space there's still just way too much um, negative connotations attached. So it's not just a price inhibiting factor. It's actually the overall perception of the industry. And I mean, if you just quickly glance at, the tools like, um, I forget the website, but basically where you can see all the up and coming launches. There have been a significant reduction since last year, but a lot of things that are still being launched are really just copycat projects. So there's not real novelty to attract a new the mainstream user. So I think that is still to come, but overall it makes sense for why we are where we are.
I think there were quite a few cool projects though in the NFT space. There was Art Blocks, which was pretty cool. There was the I forget the name, the checkmark one. Was it called just check? That
Yeah,
was
yeah,
also pretty cool. And there was also Art Gobblers, which Paradigm Capital did with the creator of Rick and Morty. That was also pretty cool. And they did innovate, especially Art Gobblers. They had a pretty unique system of generating more and more gobblers and more and more art, and actually making it about the art itself and not about just trying to create some hype, mint some, raise money to a mint and then just nothing, right? It was, you wanted to create a project that would be sustainable and hold its value even after the hype died down. And I think some of them were pretty successful, but the future of NFTs is way wider than art, and we know that, and it's way wider than just stuff like this. But it's still good to see these different experiments happening all the time.
Yeah, absolutely. One thing that just recently happened was this project called Digigaigaku.
Yeah,
They just they bought ad space at the Super Bowl,
yeah,
which was interesting because it was the first project to actually have like a full-fledged ad. Like Nouns had an ad, or I should say product placement sort of last time around, but this was a full-blown ad. And I mean, just reviewing it, it doesn't seem like it performed as well as it should have, or at least what people thought. Um, and of course, these people when I refer to are biased people who are in the space who are have vested interest in the positive movement of the market. But I think their goal was to onboard, these non-crypto users, um, because by way of being part of the Super Bowl. But it looks like I think 70% of the people who claimed there was a QR code and you have to claim an NFT. I think 70% were existing crypto users. But I mean, it's still interesting. It's still positive to see, projects making such large moves, Web3 native projects. So that's always something that I respect. Right. Cool. Let's now move on to our 2023 themes. I think the first one, which is NFT finance, is something that is quite interesting. I think for you as well, because you're heavily in the DeFi space. Um, so just to put some context first for our audience, um, NFT finance is essentially what I think of as the second step of financialization of media, and NFTs itself being the first step, because once you actually wrap media assets, it could be a song, an image, whatever it may be, in an NFT, as an NFT, then you get access to 24/7 global markets, ownership and provenance of ownership, and of course scarcity driven value and such. But now what we're really seeing is the emergence of a whole new array of applications, um, similar to what DeFi experienced, what DeFi led, I would say. And these applications are essentially financial primitives. So what we're talking about is borrowing and lending, um, derivatives, and so on, right? Um, and what these do is really it helps you supercharge, um, what you can do with an NFT asset, right? Um, so if we jump into the first category, which is lending and borrowing, and which is arguably the most fundamental of all of them, all of the primitives. Um, this essentially what this means is, as an NFT holder, I can deposit my NFT as collateral and then take a loan against it. In very simple terms, right? And this particular uh, this particular segment led by BendDAO and NFT5, those are two major players here. They have, um, you know, uh, they have led the whole segment to surpass $500 million in cumulative borrowings, um, which is quite phenomenal, right? Because I think it was only, I would say, like around March, April of 2022 is when the whole segment actually started to take off. Um, So basically a year. In 1 year, such a nascent space has already, reached this kind of traction. Of course, there are other players. There is, Pine Arcade. X2Y2 has actually got a lot of momentum in recent years, recent times. But, NFT Fire and BendDAO has definitely been the more dominating of the players. And one last thing I will mention is, while the USD value of these loans are seriously off the peak of during April March of 2022. The actual absolute ETH borrowed, um, in for at least NFT5, which is indicative of the overall market, it peaked surprisingly, um, in it peaked last month, which is
uh,
which to me is quite outstanding. I mean, I'm trying to figure out what if there was a specific catalyst to this, um, or was it completely organic? For now, to me, it seems like it's organic because I've not been able to see anything, you know, to really cause such a huge move against the trend of the overall market, right? Um,
So,
but yeah, that's
so
yeah.
the way I think about it is that I mean the majority of volumes. I don't know if you have this stat, but
Mhm,
I read something saying the majority of volumes traded for NFTs are pretty much volumes for the top 10 or top 20 blue chip collections,
mhm.
right? Because they have proven that they're a store of value, so they have a consistently high enough floor price, and below that they have like a group of market makers now, probably like Franklin for Bored Apes who owns 60 or 70 apes, and he's constantly kind of setting the price for NFTs and kind of ensuring that the floor price remains at a certain level. And I think because of that amount of financialization, these NFT5 products are able to support pretty much these blue chip collections. um, and I think it's just these blue chip collections that are driving all of these volumes for NFT5. So I don't think it's a market around NFTs in general that's created. I think it's a market around these 10 or 20 collections that have
Yeah,
become store of values on the internet. And that's still pretty cool in its own way, but I don't think it's reached the masses yet. I think it's people who got rich buying these NFTs who are now using those NFTs as either collateral or as performed as a way to earn yields, providing liquidity on Superstore, for example. And I still think this is more catered towards gens, and
yeah,
I mean the average retail user would not, you know, I can't see the paths to them getting into this in the first place.
yeah. I think the average retail user will have a hard time getting access to these NFTs in the first place. So you're trying to expecting them to, you know,
Yeah, because you can only do lending and borrowing, provide leverage when there's enough liquidity, and it's only these collections that have this kind of liquidity, right? So it's
right,
uh, unless a platform is like extremely capital efficient, which is really tough when it comes to NFTs because they're literally not fungible, so it's harder to
exactly.
price them. Uh, it's only the bigger collections where your store of value is kind of guaranteed, where you can then use that store of value to borrow against or get leverage on
Yeah,
or whatever.
yeah. No, definitely. But okay, just interested in your opinion. Do you think that over time, the category of blue chips, or I should say the collections which have this relatively deep liquidity is going to increase to such a great degree that this niche will now no longer be a niche?
I think that depends on which one it is. There's two types of, I guess, NFTs, and there's two types of products in general, right? There's either or two types of assets that you would go and buy that are not financial assets. There's store value assets and there's productive assets, right? So even
Right.
in NFTs, I would say like a crypto punk is a store value asset, right? It's just 10,000 punks. They have absolutely no utility other than the fact that they're crypto punks. Now, a body, for example, its value is not only tied to the fact that it's a body, right? It's the entire ecosystem they're trying to build, and it's the vision that they're pitching to holders of bodies, right? That there's bodies, there's mutant apes, there's the kennel club. Now they
Yeah.
have the other side. Then they created the game, and they're eventually trying to create a metaverse inside which you can, or a whatever it is, to use your NFTs inside that metaverse, right?
Yeah.
So that's a productive asset, and that's why it's valued the way it's valued. So for board apes to justify that value long term, they need to deliver on all their promises and then continue the timeline. Crypto pumps, on the other hand, they don't need to justify their valuation anymore. They were like the first big NFT collection, and they always will be, and that's why they are that. So I would say most NFT projects fall into the latter category, which is a productive asset or trying to be a productive asset and based on the future value that this productive asset could gain. So yeah, I think long term there will be mostly different blue chips than there are today, other than maybe a few.
Hmm. Got it. No, makes sense. This is the this this whole concept. I is very similar to what I forget his name, but
Yeah, but I think we're referencing the same article. Gavin, I don't
oh,
remember who wrote it, but
yeah,
yeah.
I think he works with some partnered collab currency. Um, we'll put the link in the YouTube description.
Yep.
Super interesting read. Um, so yeah, let's move on to the next one, which is derivatives. Um, derivatives are interesting because if we're saying that borrowing lending is for the degens, this is like for the degens squared, right?
Yeah.
And
Especially since
essentially,
NFTs are anyways a leverage bet on Ethereum.
yeah,
So
exactly. And I think this segment is much more early than even borrowing and lending.
yeah,
Um,
this would just increase the volatility,
exactly.
but it would also lead to, I guess, more accurate pricing because if you have perps, then you can start hedging, and then once people are able to hedge, then that's when the best price discovery possible happens. So I guess in a way, it's bullish for the best NFTs, but it will also lead to that much more volatility.
Yep, no, precisely. Like, um, volatility is going to increase because, and of course, then um, because of the increased leverage and accessibility to the collections without actually having to spend the large amounts of money to actually uh, what you need. So completely agree with that. Two of the um, two of the projects that are interesting that I came across at least, and both are not even. Hook protocol is public, but NFT Perp and Hook protocol is an options protocol for NFTs, whereas NFT Perp is futures for NFTs. I think NFT Perp is still in private beta, so still just to be seen whatever actually happens to the segment. But this one interesting point that the report made was because of this infusion of leverage right into this segment, um, it could catalyze quote unquote NFT fi summer, which is interesting um, in the sense that it makes sense because there's going to be a huge uh, catalyst for new for users for activity and also it parallels prior bull runs where and a catalyst such as this actually then triggers the greater bull cycle. So yeah, I mean, any thoughts on that? Or
Yeah, I
are you?
guess.
Yeah,
Yeah, I guess if you introduce leverage to NFTs, then it means that even an average retail user could potentially be able to afford something like a Bored Ape, right? And they would be doing so with leverage. And that's obviously risky because they could firstly get liquidated easily, and then secondly, if everyone has access to leverage, that could lead to you know obviously massive volatility, but also potentially a lot of bad debt. So
yeah,
but yeah, I
yeah,
still think it's necessary because if NFTs are to be more than just art, they still need to have tools to financialize, right? Like even if you have a house that's an NFT, you would need some kind of system like this where you can use that house as collateral and get you can borrow against it or whatever. These are primitives that are setting up for
yeah,
that potential future as well. Um, and maybe not exactly these ones, but there's still it's a design space that's very active and would be useful for other things in the future as well. So I mean, it would be short term to think that this is just for degens, I guess.
yeah. Before we move on to the next theme, uh, I want to mention a few projects that are interesting and in the NFT file space, but maybe not as fundamental as borrowing, lending, and derivatives. And that is, we have the whole segment of NFT fractionalization. This is not new by any means. I think the prominent example of that was B20, which was basically the Metacoven who bought the Beeple 5,000 days piece. He made a collection of 20 NFTs and then of Beeple NFTs and fractionalized it and sold it. It's not done very well, but I think the concept is sound. I mean, that's a very high level take, but there are other projects such as ArtFi, Nibble, that are building in the space. Um, Another interesting uh, project is Reservoir, which is basically providing API access um, essentially to an order book um, of NFTs, which is aggregated across all marketplaces. So this is like a middleware for marketplaces to build on. Charge particles is interesting. I don't really know much about it, except the very high level. What they say they are doing is they essentially building, you know, they're they're providing NFTs the ability to have to nest within themselves. So essentially, um, on a more pragmatic sense, what they're doing is they're allowing an NFT to have a wallet associated, and that wallet can then hold anything. Um, and how actual use cases works might be an episode for another day, but it's still an interesting concept. And then we have other projects like Astaria, Upshot, MetaStreet, uh, at least Astaria Upshot, which helps in the whole pricing of NFTs and pricing of NFT loans. And yeah, so I think those are just a few names that we'll also mention in the article for readers and listeners to, if they're interested in learning more. Um, but yeah, let's move on to the next one, marketplace unbundling. So this, in fact, we actually already touched upon quite a bit in the introductory part of this podcast. But so let's just quickly, just go over it. Essentially, what the thesis here is that the exchange business, is first of all, it's a great business. Scalable, cash, steady cash flows, not dependent on any particular project, and of course, being in the NFT space, it's in a growth market, and that's why you've seen, and the last important point is the actual service is undifferentiated, right? You're essentially just matchmaking between buyers and sellers, um, and because of these factors, you've had this whole bunch of other players enter the market and really taken away from OpenSea's dominance, right? Um, and but if the market is just if it's just undifferentiated and it's just matchmaking between buyers and sellers, then what is the reason for these comparators, right? And um, the answer to that is what we spoke about earlier, which is the NFT space is very vast, and with that, it it causes the audience of the NFTs, the consumers of the NFTs, to be vast as well. So we have, what dominates right now, which is PFPs. Then you also have um, fine art, you have in-game assets, you have fashion NFTs, and so on and so forth, and all of them music NFTs, and all of them essentially have their own, purchase cycle, or the buying cycle is different for each asset, or um, there are significant categories which have these differentiated purchase cycles. So, for example, um, someone who is looking to trade an NFT, their experience is significantly different from someone who wants to collect an NFT. Hence, OpenSea versus Blur, right? Um, Similarly, uh, we have projects like Fractal. Fractal is basically a marketplace started by Justin Khan, the founder of Twitch, who and the Fractal marketplace essentially is a marketplace only for video game assets, right? Um, and that they would have their own requirements. Similarly, you have marketplaces for, you mentioned art blocks, which is basically an marketplace for only generative art. So because of these differentiated use cases, we're seeing verticalized marketplaces pop up. And even though right now that thesis is not played out yet, but Blur is probably, is a great early indicator of what could happen, right? And lastly, just before I hand it over to you, um, we've seen this happen, right? In previous markets. I think the really famous example that everyone looks at is the Craigslist example, which is basically Craigslist was this horizontal marketplace which had these that provided matchmaking in these various categories, and from each category actually popped up, large businesses, in many cases, large on Craigslist itself. So, for example, on Craigslist, used to matchmake between, people looking to either rent out their house and people who want to crash for a night or so. Um, that ended up being Airbnb, right? Um, Another example is there were the chat forums, the discussion forums in Craigslist, and you know that emerged that emerged Reddit, which is a massive business, right? So there are many examples like this. There's Upwork, there's Tinder, there's a whole bunch of examples. But essentially, the common theme is because there was this horizontal marketplace that was catering to such disparate use cases, it warranted verticalized marketplaces to cater to that specific niche and provide the best experience for that particular niche. And hence, we have these other marketplaces, and the same is happening, or is, or is, or what we're seeing is it could happen, and looks like it's going to happen in NFTs. So yeah, do you agree with that? What's your take?
Yeah. So I mean, the fact that Blur is doing so well. So I mean, I guess Blur is what 45% of volumes. OpenSea is 35% of volumes.
Yep.
So that in a very rudimentary sense indicates that NFT traders are 45% of the market. NFT collectors maybe of artworks and maybe small time traders are 35% of the market on OpenSea. And then the rest of the market is dedicated to other things within the NFT space, right? Which is whatever you just said right now. There's like music, there's gaming, there's something
Fashion.
like art blocks, which is generative art,
Yeah.
or like something like Super Rare, where they have curated artworks from specific artists, or something that you are working on yourself, something like Hefty, which is catered specifically towards like digital art. So there's many different experiences that people are looking for, and NFTs are just a way to kind of encode that on a blockchain. But the experience should be completely different if you're trading a different type of asset. And
Hmm.
I guess it should play out if people actually have interest in these different verticals, and that remains to be seen still, because I think greed
Yeah.
is still the biggest motivator when it comes to NFTs, and I don't know if that's going to discontinue anytime soon.
Yeah. No, I think that's a fair assessment. I think one thing I'll just quickly add to that is I think the number of verticals might not be as vast um, as portrayed by some. And the reason, one example that sticks out to me is if you look at the music NFT vertical, and this is we briefly mentioned this on our discussion then as well, and that is if you look at music NFTs alone, right? We have these multiple marketplaces. You have Sound that does one of ones. You have Royal that does NFTs for royalties. And then I think that there was one more which basically did editions. So not one on ones, but it like multiple NFTs in one collection. Um, all within the music NFT space. So maybe you don't need that degree of verticalization or specialization. Um, but
Maybe you need
uh,
aggregation within verticals,
right, right.
within
I think
within like the most general sectors possible.
yeah, correct. I mean just to top of my head, just make some prediction. I think PFPs and fine art and all that what we're seeing right now is warranted. I think in-game assets definitely warrants its own because it's going to be a massive segment. Fashion is one that uh, there are these projects called Drop and Tribute that are creating their own marketplace for uh, fashion NFTs. That is one that I'm still on the fence. I'm not really sure if it really does um, warrant its own. But I think one case to be made for why it does is um, fashion NFTs. You can add, another layer of utility by, say renting out your apparel or your virtual apparel, and that service you can integrate within that marketplace itself. Then maybe there's something there. But this is very bare bones right
I
now.
think
But yeah,
renting out of NFTs would work in most verticals. I mean, even gaming, it would work a lot, right? Like we already saw
Yeah,
that with kills and stuff like that. So,
yeah. No, my point was so that would actually make that segment big enough to warrant its own
right,
um, uh, vertical for marketplace. So
agreed.
anyway, let's and sorry, one last thing that we forgot to touch upon is something that you said earlier that most of these volumes are uh, from a small group of small group of collections. So maybe it makes sense for them to start their own private marketplaces and capture all the fees that they've been giving to the marketplace so far. So just a quick example is 4D Club. I think cumulatively they've paid out $40 million plus to OpenSea in just transaction fees. So if they create their own marketplace, then it makes sense for them to verticalize as well, right? Um,
100%.
so yeah, so let's move on. I think the uh, next one is NFTs going mainstream. This is another theme put forward in the report. I think this is, uh, I mean, this is just something that we hear on and on again and again. I think the two main things driving this, at least this recurring theme here is big tech has seen some adoption of NFTs. So we've seen, Reddit launching their collectibles to like 6 million wallets. We've seen Instagram supporting NFTs. We've seen YouTube introducing NFTs, Apple Pay. So there's definitely some traction there, but
Biggest
still
one is,
early
I
days.
guess, Twitter as well, right?
Right, Twitter now, right? So there has been different movement in the big tech space, and on a similar vein, even big brands such as Nike, Adidas, Gucci, and much more have actually launched the NFT strategy. I think the poster boy case here is Nike and their purchase of Artifact. Um,
Yeah.
that purchase has led Nike to generate $180 million in revenue, which is insane, an insane amount of money, even for a large brand like this, like Nike. Um, so I mean, that's just definitely a standout case right now. I think the second most is Dolce and Gabbana, who did like 23 million, so a far cry from 180 million. But I think personally, brands and tech and these tech companies getting involved in NFT is not surprising, but I don't think it's a reason for why NFTs will go mainstream this year. That's still to be seen,
Yeah,
right?
I agree.
And let's just move to the next one, which is also not a very long topic. NFTs are social tokens. Um, so essentially, the thesis here is that NFTs will be the design choice for how communities essentially financially align themselves um, and launch an instrument which represents the community's success, right? So we initially saw a lot of communities like Friends with Benefits DAO. We had even Chili's, right? The project launching social tokens for individual sports clubs. Um, and these all fungible tokens launched to represent the collective community success. I think the thesis here is that this trend will reverse and move towards communities launching NFTs. And you know, the primary reasons for this is there's a broader design space. The token economics are just way easier. And lastly, and in my mind, most importantly, there's lower regulatory concerns. Um, because it's very easy to deem a fungible token as security as opposed to NFT.
Oh
Um,
yeah, let's not get into that right now.
right, fair. But essentially, it's pretty straightforward here. Instead of launching fungible tokens, I think the play here is for communities to launch NFTs in the early days. You know, get to some state of maturity and then explore the option of launching a fungible token as well, similar to how Bored Ape did it with first the NFT collection and then 8 because I think the confluence of the two is where there's the most exciting design space and the most scope for gamification. But yeah, I think the thesis of NFTs being the primary choice of tokenizing communities is sound. Yeah,
Definitely.
cool. Uh, and the last theme of the report is digital. This is also another one that I think is personally very interesting, and is one that I consider a no-brainer. And I think most people consider a no-brainer, to be honest, because the theme of of the lines between digital and virtual being blurred. I mean, this is not new. This has been happening since maybe I would say like the 90s really, when the tech uh, sector started to emerge. Right, people started spending more time in the computer as opposed to in the real world. Now I think I mean we just out of curiosity, how long do you spend time on your screen then
I mean, a
off
majority
screen?
of my life, I guess, now is on.
Yeah, exactly. I think that's a common theme for all of us, and I think NFTs here just allow this interplay, right, of how you interact uh, with the physical world and the digital world um, in a more gamified manner. I mean, the design space of what you can do is just wider, um, and it makes sense not in all cases, but I think one of the major use cases is for fashion, because
Yeah.
fashion you have a physical you know there's a I mean fashion is historically physical, and only now we're seeing the shift to digital. But the emergence of, for example, skins, in-game skins, has seen such huge traction, and then of course us having um, move us the move for us to us having avatars, and then wanting to express ourselves via these avatars um, in a medium that resembles what we already do. Right, that's the most important. Um, is what's interesting. So I think this is going to continue, and there are already examples. Unisocks, for example, is a one of the classic examples. Really, it was basically an NFT that was redeemable for actual socks, Uniswap branded socks, and I mean now the NFT is trading at $30,000, which is insane for like a pair of
Yeah.
socks.
I've also seen um a model where basically you can buy an NFT of these shoes, okay, and the shoes exist in a warehouse somewhere, and you can track them using a specific chip that they put in the shoe,
Mhm.
and you can trade this NFT freely while the shoe is unopened and in the
Mhm.
warehouse. But the minute you redeem that shoe and you actually get it for yourself,
Mhm.
the NFT is burnt. So it's basically posing a question to users as to, would you rather hold items in the digital world or redeem them and hold them in the physical
Yeah,
world? And the interesting thing is, half the people chose to redeem it and half the people chose not to. So there's like
yeah,
no clarity as to what would people actually choose. But it also could be that we are at like the halfway point, you could say, of
yeah,
going completely digital.
yeah. I tend to fall in the latter, where I think it's indicative of how many of us actually care about how, like, what we express digitally as opposed to what we express physically. And I mean, personally, I think it's going to, like, if we do the same to tally in 10 years from now, I think that 50% would be 75 at least to the side of not redeeming it. But I
Yeah.
mean, that's just my prediction. But yeah, I think that basically covers what the themes of the report were. One thing that is interesting, that's very new, is Bitcoin NFTs. I'm not sure if you've come across this project called Ordinals, which
Yeah.
essentially have really put Bitcoin NFTs on the map. Essentially, what from what I understand is, in after the 2021 Taproot upgrade, essentially you could the cost to store data reduced significantly on the blockchain, on the Bitcoin blockchain. So now what Ordinals did was inscribe arbitrary data on the lowest denomination of a Bitcoin, which is a Satoshi, and that inscription essentially turned it into NFT because it's now unique, right? And these have just skyrocketed. I mean, daily mints, from from zero really has, I think it's at 3,000, just under 3,500 per day, which is insane. It was zero like I would say, yeah, I mean,
Yeah.
earlier this year, 2020, no, sorry, earlier this month. It's crazy. It's like it's a very,
Yeah,
very
I
new
mean, this is
phenomenon.
one of the new narratives. I think there's two schools of thought regarding it, and one is positive, one is negative. The positive one is that if NFTs come on the Bitcoin network, then it's a way for the network to generate sustainable demand and also keep some high transaction fees. And higher transaction fees are more important as mining rewards decrease and decrease over time.
Hmm.
Maybe this is a way for the Bitcoin network itself to get organic usage. That's the positive. Negative says that they're essentially corrupting the core purpose of Bitcoin, which is to be sound and the hardest money possible.
Hmm.
And anything else is kind of deviating away from that cause. But
Hmm.
to those people, I say, what happens when mining rewards run out? What incentive do
Yeah.
validators have to continue validating the network if they're only going to get
Yeah.
transaction fees? Like transaction fees would then be exponential to just send Bitcoin to one another. But if there was NFTs on this blockchain, you could store high value art, and then there is some value to paying a high transaction fee because it is the most secure blockchain. So I
Yeah.
don't know if this will be a long-term trend because from what I've read, it's very opaque to get an NFT minted. There's no official
Yeah.
marketplaces. You can't trade out of a wallet. It's completely like backdoor deal driven and it's very trust
Yeah.
based right now. So currently it seems like a cash grab, but if they can kind of grow this out and formalize it and make it seamless for people to buy and sell NFTs, and maybe it could work. But I don't know. I don't know enough to
Yeah.
actually
Yeah.
give a financial opinion on it.
Yeah. This is definitely very new to all of us. I think. Um. I mean, the fact that it is very, you have to get really down and dirty to actually participate in this. I don't think that's like a sign for why it's a cash grab, for example. I think even like, back in the day, even CryptoPunks to actually get your hands on one of those was the same as very technically difficult. Um, so I think that's just indicative of how early it is. But
Yeah,
you're right. I think in terms of long-term sustainability, it really comes down to what the Bitcoin community, decides really. Because I think half of, I mean, this don't quote me on this, but I think I was listening to a podcast where they said about a growing number of Bitcoin, ardent supporters are warming up to the fact of NFTs being, existing on the Bitcoin blockchain. And also, like, personally, I feel if Bitcoin is this, most reliable chain, most, hardest form of money chain, then doesn't it make sense for the extremely high value NFTs to exist here? Because you're not altering Bitcoin's code for this use case. It's just inheriting whatever already exists, based on whatever Bitcoin originally wants to solve for, which is, hard money. So you're not changing any of that. So
yeah,
then if that's the case, like it seems like a no downside, only upside situation.
yeah. I agree. The more macro question is Bitcoin really
Mhm.
the hardest form
Yeah.
of money? And Ethereum also makes a case for being ultrasound money, right? That's where the whole meme came from. So that I guess is how good you are at projecting long term. Uh, Bitcoin currently has its steady supply. I've seen people say that the Bitcoin community can come together and vote to increase that supply. I don't know how true that is, but I do know that Ethereum has reached a kind of perfect equilibrium where inflation is ending up lower than Bitcoin year on year for now, and can be deflationary in periods of high network demand. And if that network demand sustains over time, then each does end up becoming deflationary, and it is better money than Bitcoin.
Mhm.
So I don't know, but that's way beyond the scope of what we're talking about.
Right. So I think this wraps it up. I mean, from my end, I think to conclude, it's very straightforward. I think it's. I don't think view on NFTs has changed. In the sense, I do believe that NFTs in some shape or form is what's going to trigger or lead the next wave of adoption of non-crypto users. It's just a matter of, and then the important reason of why that is because it can exist between technology, art, culture, and that's just a much wider audience as opposed to just finance. So like I'm steadfast on that, and it's just a matter of time really still. Maybe, I mean, I guess the question is how much time, right? And that's something that every macroeconomic guy is trying to project. And I'm not going to sit here to act as I know the answer to that, but we'll see.
Yeah, agreed. I think, maybe a few things they didn't, one thing they didn't cover was soul-bound tokens in this report.
Hmm.
Still unexplored relatively as a design space, could really be beneficial in terms of identity. And if you have a secure form of on-chain identity, that leads to a whole other host of use cases, like under collateralized lending, proof of links to your government stuff. It can be uh, proof of your actual humanity. It can
Yeah.
link to socials. It can give you a on-chain social score, on-chain credit score. So yeah, that's another. I think NFTs will end up being a way that you take your entire identity on-chain in a secure way and can do lots of things with your on-chain identity eventually. But I guess the long-term view and a complete prediction. But yeah, still I'm bullish on NFTs.
Yeah. Awesome. So I think that wraps it up. Thanks, guys, for tuning in, and see you in the next one.
See you guys. Peace.